After Friday's reversal and the upcoming FOMC rate announcement, are the S&P 500 and the market on the verge of a sell-off? In this week's S&P 500 analysis video, we'll look at the market sentiment, market internals, the price action of the S&P 500, and the other major market indexes and see, is the market on the verge of a sell-off? We'll also look at the price of oil, US dollar, the 10-year yield, silver, and gold and see what they are telling us where inflation and interest rate might be headed. In addition, we'll look at these two FANG stocks, Apple and Tesla, to see what they are doing that could influence the direction of the S&P 500. Look at the performance of the indexes. We see that the Dow Jones Transportation was the best performer for the week. It gained 0.86%, followed by the New York Stock Exchange Composite 0.6%, and the Dow Jones Industrial gained 0.12%. So those were the three indexes that had a gain for the week. And the S&P 500 lost 0.16, or a little bit over 7 points for the week. And the Russell 2000 lost 0.25%, or 4.5 points for the week. And the NASDAQ Composite lost 0.39%, or 53 points. And the NASDAQ 100 is the worst performer. It lost a little bit over 0.5%, or 77 points, almost 78 points. So looking at this weekly chart of the S&P 500, as you can see, we're still looking at a higher low, although this might be a lower high. So it depends on whether it be able to come up and take out this pivot high in the coming week and then move up to this high. But if the coming weeks we see the S&P 500 take out this low, then yeah, we could be looking at a new sequence of lower low, lower high. But right now, the S&P 500 appear to be coiling up here. You see an inside bar within a inside bar. So we're getting a little bit of a coil or a triangle. So on this triangle formation here, we could break out, to the top or break down to the bottom here. And it is below this 10-week moving average here on a weekly close basis, but it's still above this 40-week moving average, and both of these moving average are still ascending. Now let's take a look at the market sentiment and the market internals before we take a detailed look at the indexes. Now looking at this sentiment chart here, you see the S&P 500 was down on Friday. If it wasn't for Friday, actually the S&P 500 was actually working on a up week here up until Thursday, and on Friday with a negative minus 54, almost 55 points loss, it pushes the S&P 500 down about 7 points, or 0.16% for the week. So you see that the VIX is still only sitting down here at below 14 at 13.79. So the market participants are still quite complacent, not really fearful at all. Although the put-call ratio is inside of this 0.75 and the 1 area, so it's sitting at 0.81. So although the market participants are not fearful, they are not all risk on. So definitely they are being a little bit of cautious here. And looking at the internals here on the up-down volume ratio, the New York Stock Exchange, we saw Wednesday and Friday, we saw a minus up-down volume ratio, implying there's more down volume than up volume, but only modestly, because it's only minus 1.8 on Friday with a 1.2% down day. So that is not that bad comparing to Wednesday. Wednesday was actually a slight up day, and the up-down volume ratio was minus 1.77. But also looking at the advanced decline, the daily advanced decline on Friday, there's only 930 more declining issue than advancing issue. So that is not too bad, because normally on a day that is down minus 1.2% or so, you will see there's somewhere around 2,000 more declining issue than advancing issue, but we are not seeing that. And also even on Wednesday, we did get a negative divergence on the advanced decline versus the S&P 500. But on Wednesday, it was only 632 more declining issue than advancing issues. Now for the new 52-week high versus new 52-week low, we are seeing more 52-week low than 52-week high here for the week. Except on Thursday. Thursday, we saw a little bit uptick, 2 more new 52-week high than 52-week low. And looking at this cumulative AD line, we actually see a positive divergence here between the New York Stock Exchange cumulative AD line and the S&P 500. So that's a little bit of a positive here in light of a little bit of a pullback this week. Now for the NASDAQ market, it's a little bit more negative. On Friday, it was down 1.7%, and the up-down volume ratio was actually minus 2.3. So a little bit more downside pressure on the down volume here. And the daily advance decline, there was over 1,300 more declining issue than advancing issue. So a little bit more broader market participation on the downside in the NASDAQ market than in the New York Stock Exchange. But nevertheless, it's still, looking at overall things, the bigger picture is not that bad of a day in terms of the internal versus the actual percentage loss in the NASDAQ 100. But we cannot say that on the new high, new low in the NASDAQ market, there were 235 stocks making new 52-week low versus only 60 making new 52-week high. And you can see there has been more new 52-week low than 52-week high in the NASDAQ market. And similarly to the New York Stock Exchange, we are seeing a little bit of a positive divergence here. But of course, we still got this huge negative divergence that we need to get resolved. And also this one here. So there are still divergences, negative divergences, that need to get resolved by the NASDAQ 100. So overall, the market participants are not fearful, although they are not risk-on. And the internal is not that negative. In light of the pullback on Friday, the more than 1% loss in the S&P 500 and the NASDAQ 100. So again, we have to wait until next week to see what happened, because there is a FOMC meeting coming up, and that could change the landscape for the market in the remainder of the month. So just kind of pay attention and don't get too FOMO or too complacent. On this 10 and 2 yield curve, we are not seeing any changes at all, or hardly any. It's still sitting at minus 0.7. So this yield curve is still inverted. And on this 10-year yield chart here, you can see that it is still hovering around this 4.3 level here. And the dollar continued to climb. It is moving toward this 105.82, the level that I've been watching for quite a while now. So I wouldn't be surprised to see that get tagged sometime next week. And here's the dollar index future. You can see that it is also marching toward this 105.84, this low volume area here. And looking at crude oil, we see that crude oil move about this $90 level. Remember, I've been watching that and also saying that I'm expecting crude oil to move up to that 90 area. And right now on Friday, it closed at 191.13. So if it continue to push up next week, I see possibly we might see some resistance and get a little pushback when it get up to this 91.61, this area here, this high volume node here, this zone here. So we could see a potential pushback and possibly come back down to maybe around this 80, 88, 89 area, and then chop around before make another push up to this 96 level. Now, silver found some support here off of this trend line here. So we're going to see, will silver be able to hold above this trend line and move back up here to this 24.50 area, this composite point of control, and see would it be able to try to get back up toward this trend line, break it above the 26.70 area. But if it breaks this trend line, then I'm looking for silver to probably come back down and test this 21.55 level. And gold might have found some support near this 19.15 level here. Right now, it seems to be bouncing back up to this 19.45. So we're going to keep an eye on it to see would it be able to come back up and push through this trend line, get up here to this 19.70 area. If it unable to push through this trend line, then look for the possibility of come back down and retest this 19.15 once more. Looking at the 11th sector in the S&P 500, we notice that the utility is the best performer for the week. It finished with 2.79% gain for the week. And the worst performer is the technology sector. It lost 2.25%. So looking at the chart here, you see the relative strength chart on the technology versus the S&P 500. We notice it is sloping down, so it is underperformed the S&P 500. And for the healthcare, it's sort of stable. It's not underperform or overperform. Seems to be performing alongside with the S&P 500. And for the consumer discretionary, it's been outperformed the S&P 500 until just on Friday or so, kind of pulled back a little bit. But I still would categorize this as outperforming the S&P 500 so far. And here's the financial. The financial is also outperforming the S&P 500. Likewise, for the communication, it's also been outperforming. Even though the industrial been underperformed, but recently it seems to be creeping back up a little bit. So the last couple of days, it seems to be outperforming the S&P 500. And the consumer stable is also showing a little bit outperformance versus the S&P 500. And energy has been outperformed the S&P 500 until recently. It seems to be a little bit flat, so it might taking a little bit of a pause here. And here the real estate is still down here at the low, and also show a little bit outperformance relative to the S&P 500, but it's not much of a trend here though. And here's the material, and also kind of flat. And look at the utility. The utility been outperforming the S&P 500 in the last couple of weeks. So out of the 11 sectors, the one that really underperformed relative to the S&P 500 is the technology, the XLK. Now let's take a look at the indexes on a daily basis, starting off with the S&P 500. And as you can see on the S&P 500, we had a reversal day on Friday. And right now, the key level to watch is this low and also this high here, because we have this low trend line here. And if it could come back up and break this trend line, take out this high, then come back and back test this trend line, we could, come back and form a series of higher high, higher low, and possibly come back up to this 4,600 level. But if it is unable to come up and take out this pivot high, instead come down and take out this low, then here's a low that we need to keep an eye on. Because if we come down and take out this low, come back and back test, possibly up at this 4350 area, then we'd be looking at the possibility of the S&P 500 come back down to test this 4200 area and also put in a higher low, a lower low and a lower high. So that would be a little bit more of a cautious and a bearish type of a move. And that depending on would it be able to hold this 4200 level, and that will dictate whether we are getting a pullback or a correction. Because if we come down here and get a bounce, that is still somewhere around that 10% level. So that's basically just a little bit of a pullback. And if we get into close to that 20%, then we be on a verge of possibly getting into a new bear market. The 4200 will be the key level to watch for the near term. But right now, this is the level to key in on, and that is 43.35.31, this pivot low here. If we take out this pivot low, then we have to be much more cautious. Now, the market is pricing in a upper range for the coming week between 4516.67 and 4504.40. So it is pricing in this pivot high here as a potential resistance. So we have to break through this upper range in order to get up to this pivot high. And also it is pricing in a lower level, the lower range between 43.96 and 43.80. It is pricing in for it to take out this low. So, be cautious about this low here, because once you take out this lower range, we could come down and possibly test this low here, this pivot low here that I've been talking about. And for the NASDAQ 100, you got to keep an eye on this high here, this pivot high, and also this pivot low for the coming week. So if we could break this trend line and take out this pivot high, then we could possibly see it making, trying to make its way back up to this 16,000 level. But if it is unable to get back above this trend line, take out this pivot high, then look at, keep an eye on this pivot low. So once you take out this pivot low, then we'd be looking at this level down here, somewhere around this 14,800 area. And this basically this trend line support And this low here is key to watch this low, similar to the S&P 500. If we take out this pivot low, then we'd be putting in a huge lower low here and dip below this 14,245. Then we could be looking at the possibility of coming back down to this area here, somewhere around 13,250. For the Russell 2000, you can see the Russell 2000 is actually rolling over a little bit here ever since it come up here and got rejected as this 1925 level. So you're looking at a little bit of a downtrend here. So the key is to see would it be able to hold this level, or essentially looking at this area here for support somewhere around this 1820 area. And if you could find some support and bounce back up, then it might have a chance to maybe come back up above this trend line, try to break it. But for now, it appears that it is heading down to this gap area here near the 1780 area and try to fill this gap. So basically, it's kind of keeping an eye on the Russell. I think there is a little bit more downside for the Russell 2000. So keep an eye on this low here. And this pivot low is somewhere around 1830.83. So look at these two low. And looking at the Dow Jones Transportation, you see the Dow Jones Transportation is putting in a series of lower low, lower high now. So if it come, even though we get a little bit of a bounce next week and come up to this 15,650 area and then pushes back down, you just still maintain this lower high, lower low type of a sequence here. So we're basically looking for the transportation possibly come down to this area here, somewhere around 14,700 area, and see would it be able to find support here. And look at the Dow Jones Industrial. You see the Dow Jones Industrial still riding on this trend line here. So although that it is making a little bit of a reversal down, we could see it come down and possibly test this trend line, get down to this 34,277 area and see would we be able to see a bounce back up. But again, you know, it had to take out this pivot high here. So to continue to put up this higher high and higher low sequence and possibly come back up to this 35,500 area. Now, if it unable to hold this trend line, then we could be looking at the industrial come down and try to fill this gap here near the 33,300 area. And for the New York Stock Exchange Composite Index here, you see that it tried to get back above this trend line here and got rejected on Friday. So right now, we're basically looking for the New York Stock Exchange Composite to see would it be able to hold this pivot low here, somewhere around 15,800. And if we break this low, then we'll be looking at this pivot low here near the 15,600 area. So those are the key low pivot low that I'll be keeping an eye on for the near term. Unless it could be able to take out this trend line, get back above this level here near 16,100, then we're still looking at a possibility for the New York Stock Exchange Composite to continue to make a lower low, lower high and get down to this 15,400 area. Looking at Apple here, you see Apple ever since the earning gap here, Apple has been making a lower low, lower high. And right now it seems like it is also getting ready to make another lower low. So for the coming week, it's important to watch this level here, this low here, which is 171.96. And if Apple move below this low, then essentially it has make a lower low. And we could see this lower range of the expected move for this coming week between 170 and 169 get tagged. Then we'll be watching the possibility of Apple moving down toward this HVN here near this 165 level here. Now, in order for Apple to reverse this trend, it first have to come up and fill this gap and come up and break this trend line. So there are a lot of work for Apple to reverse this trend and come up and take out this take out this pivot high here. See, it failed to close this gap here, this earning gap completely. So that kind of signify Apple is showing some weakness here. So yeah, gap or meant to get filled, but it could take a while before it come back to get filled because here's another gap that hasn't been filled yet. So don't count on these gaps getting filled in the near term. So watch the Apple's price action for the coming week to see what it comes below this low here. And if it does, then get prepared for Apple to see lower prices and could work itself down toward this 165. And here looking at Tesla, ever since it broke down from the last earning report and came down to these pivot highs here and found support, it's been on a tear moving back up. And recently it's been quite strong, and it's one of the strongest stock in the FANGs group. And also you're looking at these price action, it's been one time framing up. In other words, it is making a higher low on a daily basis for 6 consecutive sessions. So for the coming week, I wouldn't be surprised to see Tesla continue to move up and possibly come up and fill this gap. And that is where the market is pricing Tesla to go on the upside with this upper range of the weekly expected move between 287 and 291. So I'd be looking for Tesla to see would it come up to this trend line, then be watching for a potential price reaction on the trend line up here to see would it be able to break through this trend line and move toward the 300 level, or would it get a rejection and pushes back and come down and maybe fill this gap and find support down here near this 256, 257 area, and then get another push back up. So until Tesla, break this trend line down here, I would say right now the price action on Tesla looks pretty bullish on the upside. As we can see, the internal are not as negative as the SP 500 and the NASDAQ 100 are showing us. Based on the recent price action, we are seeing a pullback from recent high, and that could accelerate a reverse after the FOMC announcement this week. The dollar and the 10-year yield are telling us possible further rate hike is in store. Maybe not in this meeting, but could be in future meetings. Because oil price has been going up and it doesn't seem to have reached the top for this cycle yet. Until oil price starting to reverse downward, expect inflation to remain high, if not going higher. If you find this video to be useful, smash the thumbs up to help promote this video on YouTube. If you are new to this channel and like to continue to watch these contents from me, click the subscribe to support this channel. Thank you for watching.